Everybody, this is Osprey from MyChartCoachCom, and in this video we're going to take a look at volatility, and we're going to take a look at the indices. There was the big run up today leading up into the Fed minutes, and yeah, this was going to be the first time that we heard the minutes from the new Fed chair, and yeah, they were from the January minutes, and as the market was building steam, it closed near high of day right into those minutes, and then all of a sudden, the minutes came out, the markets rallied, they ran up 300% or up 300 points for the Dow Jones Industrial Average, and then they started pulling back. And so, yeah, as people started reading through the data, the market started picking up steam to the downside, and then volatility creeped back into play. So take a look at VXX here. Okay, this is the S&P 500 VIX short-term futures ETN, and it did close up 1% today. It was down on the day. Heading into the minutes, they had volatility pegged at low of day. It was hitting down here at that 200-day simple moving average. That's the red line there at 4140, and that level held, and then it closed today back above EMA's 4 and 8. That's the pink and lime line. As long as candles are above that level, it signals this uptrend is still intact. Okay, and so what you're looking for now is a bull. You're looking for a run back up to that 300 simple moving average at 5274. So yeah, as long as it's staying above that 4140 level, it signals it's still in play. And if candles are forming above EMA's 4 and 8, the signal is to ride. So this is a good, it's a small candle today. It has to stay, above 43.72 for the chart to be super strong. But as long as the middle Bollinger Band down here at 39 is holding, this uptrend that started back here when the candles broke above that middle Bollinger Band, which is the 20-day simple moving average, is still intact as long as this dotted purple line is holding. As you can see here, once it turned into support, there hasn't been a close below that level. All right, and so if we look here at UVXY, this is the ProShares Ultra VIX short-term futures, and it does trade options. And so this is, had the nice bounce. We were looking for the middle Bollinger Band to hold. That did hold on the pullback. As you can see here, the dotted purple line is the middle Bollinger Band, which is also the 20-day simple moving average. And today, there was the close that we had been looking for. It was slightly above, but it was above EMA's 4 and 8, and that should be the signal that if that level holds, that it wants to head higher. So currently, EMA 8 is at 1791. That's the big level to stay above. That's the lime line there. And so if you see UVXY above 18, that's going to signal more upside potential. It held the middle Bollinger Band. Like we showed, I showed you in a previous video how it had gotten, how it had closed above that 200-day simple moving average, and then it retraced back to that middle Bollinger Band. And as long as the middle Bollinger Band held, it was the reload level. So I put out the alerts that 16 was the reload level as long as that support level held. And then that's a signal that the uptrend is still intact. And so now it's above 18. If it can hold that level, you're looking for a retrace back up to the 200-day simple moving average at 25. Now, if it drops below 16, that would be a red flag. There hasn't been a close below the middle Bollinger Band, since it turned into support back here in January. So yeah, it's been holding. It's been the load level, and now if it can, now you want to see it stay above 18 and possibly run back up to the 200-day simple moving average. If you look at the 15-minute chart, you could see the action from today. So the start of the day was down here on the left, and the share price came down here. This is around the time of the Fed minutes. And I guess I said it was 1 hour, but it was a 2-hour move off of the bottom, and you could see it was just straight up, 2 hours straight, parabolic move. This had, went straight down and straight back up. That's a V-shaped recovery here, so that it filled this jar right here very quickly, and so that was a really strong move. Notice how it closed right back up here near the high close from yesterday. So that's going to be the big level to break. If it can break above this red line, around 1810. That should signal it wants to head higher, and then you're looking for this resistance zone up here is going to be the big level to break. Notice that it has this uptrending channel. It made that higher lows and then higher highs, and it's pushing higher. Right now it's in the middle of this channel, so the top of the channel is up here around 1930, 1940, call it 1950, and so that puts it right between the 200 and 300 simple moving averages. So the 200's at basically at 19 here, 1899, and the 300's at 19 1366. In order to break out and really get running again, it has to get above the blue line. So if it goes up and hits those levels and stalls out, you'll know that's a temporary top. If it fails to break this 825 resistance zone, that'll be a red flag. I mean, I think that volatility will still be in play tomorrow. When you have the indices have such a wild swing in one day to the downside, you know, whatever direction that swing is in, it will usually continue the following day. And so, you know, having such a wild swing to the downside and closing at low of day for the indices, it's more than likely tomorrow's going to be under pressure, and you would think that would you know, help volatility increase. And so you would think there would be an increase in volatility tomorrow. So UVXY should be up, and so should the calls. That's what you would think. Call options will be in play, and so we will be you know, tracking the action tomorrow. A lot of people like to trade TVIX that don't trade options, and this is another way to play volatility. This is the 2 times VIX short term, and as you can see, it has the same setup where it came down. You know, it didn't close above the 200-day simple moving average, but it hit that resistance level, worked back into the bands, and then it came down there and it bounced off of the middle Bollinger Band. And notice how this dotted purple line held as well. As long as that 824 level is holding, you know, the $8 support zone, then it's in play, and you know, the uptrend's still intact. It's also holding the 100-day simple moving average. Notice the lower wicks, this candle bounced off of this gold line. As long as these two major support levels are holding, this uptrend is still strong. Now it closed right at the next key level, which is EMA8 at 882. Closed right at that level. It needs to close above, and that's going to be the signal that it wants to head higher. So above $9 for TVIX would be your clear signal that, yeah, this chart is still super strong. It's still holding up here. It's just been, you know, slowly working its way higher, and then a break above 9 should be the clear signal. You know, that's when you get the nice push like it happened back here in January and February. And so the big level to break up above once again would be that 200-day simple moving average at 1367. Okay, so let's take a look at NASDAQ Composite Index. This is ticker symbol COMPQ, and so yeah, this is NASDAQ here. And as you can see, I want to show you this one first because it was actually the strongest of you know, Dow Jones Industrial Average, the S&P 500, and the Russell 2000, and NASDAQ. Of those four, the strongest has been the NASDAQ. You know, because it's actually above the middle Bollinger Band here. So you can see it closed above the middle Bollinger Band last Thursday on this white candle. It had that big bounce after the pullback, and you know, all the FANG stocks running, and you know, with some of them hitting new all-time highs, it really got the share price moving, or they really got the index moving. And as you can see, it closed above the dotted purple line. That's the middle Bollinger Band. It's currently at 7,205, 7,205, and that's the level to hold. Today it was pushing hard right before the Fed minutes. You know, it was pushing up here in the 7,300, 70, you know, pushing 73.25 zone, and then it pulled all the way back. Notice how it closed low of day. There's no lower wick on today's candle. That's very bearish. I mean, you know, these last candles where it had the low of day close, it opened with you know, it opened up much lower here, but it did form white candles on the day. But yeah, the pullback to low of day, it does signal that the bears were strong into the close. The last trade of the day was low of day. So now it's going to come all down to 72.05. Stay above that level and the uptrend's intact. If you see it drop below 72.05, that's going to be your signal that it's under pressure, and it could drop down to test that 50-day simple moving average at 71.23. Now a new downtrend started on February 3rd when it closed below the middle Bollinger Band. Notice the candles have been above that level, and so it's trying to get a new uptrend going. But if it goes back below the middle Bollinger Band, that would just signal continuation of this previous downtrend. It would signal that it's still under pressure. Okay, so if you look at the COMPQ 15-minute chart, you can see here how it ran up to the high, and you know, it was really pushing. You know, it hit the you know, all-time high here today. You know, busting to these very high levels up here. Yeah, not all-time high. The high on this. I'm sorry, the high on this chart, and so it was hitting the recent high of day. Notice how it was hitting this 73.41 level, and so as you have like Amazon hitting an all-time high, and other stocks that are pushing, like Netflix, it was really getting COMPQ up here at these elevated levels, and then the Fed minutes came out, and you could see here it was multiple red candles in a row. It tried to bounce here off of the gold line, which is the 100 simple moving average, and that level broke. And notice it broke below the middle Bollinger Band, which that was a red flag, and then it broke below the 50 simple moving average, the green line. So the break below both of those levels, that did signal more downside risk. And then now the close down here was right at the support level from the 20th, and so it needs to hold the 72.18. This is a huge support level. If it breaks, the downside risk is it could drop all the way down here to test the 200 and 300 simple moving average. So you could see a 100-point drop down to 71.18 if it fails to hold the 7200 support zone. So right now that 70, yeah, so 7200, 72.18, that's going to be a big level to hold. Now if you look at the Dow Jones Industrial Average, as you can see here, after it came up here and topped out in January, making its all-time high. It pulled back and it closed below the middle Bollinger Band on February the 3rd, and that signaled downside risk. And so it came all the way down. This candle was getting close to the 200-day simple moving average, is where it bounced off of, near that zone. The 200 is down here at 22,932 right now, and so it came back up and it held the 100-day simple moving average. That's the big level to hold on a pullback, 24.73. As you can see on the bounce, it came back up and it hit that 50-day simple moving average in the middle Bollinger Band on this candle right here, and it failed to break. And so and then it failed to hold the green line. And so that was a signal of a temporary top. And now it's back below EMA's 4, 8, and 13. So it's super bearish. It's still in a very strong downtrend. So right now it's signaling more downside risk and a possible drop down to 24,273. So yeah, so you could see a 500-point decline before the next major support level, a major moving average. Now you're going to have support off these candles for sure, and 24.6 is going to be a big level. Yeah, but this is signaling more downside risk. As you can see here, the chart really broke down on the 15-minute chart. It had the recent high over here on the 16th, and then it pulled back and it ended up breaking below the middle Bollinger Band. It got below the 50 simple moving average, and then it dropped below the 100 simple moving average, below the green line. And so it was temporarily back above those levels today, but the pullback dropped them below all those support levels again. And so now it's in a bearish downtrend on the 15-minute chart, and it's hitting the 200 and 300 simple moving averages. And so if it drops below the red and the blue line, that's going to signal major downside risk, and you're going to have 24,748 as the next big level to hold. Okay, and then now let's look at SPY. SPY here is at came down and bounced as well, and then it came back up and it hit the middle Bollinger Band, and as you can see, it failed to break middle Bollinger Band resistance. It's right here at that 50-day simple moving average. It's failing to break both of those levels, so that's signaling that it's failing to get a new uptrend going. And then the closing back below is signaling downside risk. It signals the bears are in control, and so now it closed just below EMA's 4, 8, and 13. If that 270 level turns into resistance, you could see a drop down to 264. That would be the next major support level. And then you have the 15-minute chart here. It shows the pullback. You have a big pullback here from the high. So it had a recent high, and then it came down and it made another high at 274, and then now it's dropped all the way down to 270. So it broke below support, the support from yesterday, and then now it's heading down towards that 200 and 300 simple moving averages. So it needs to hold that 267, 268 support zone. That's the next big level. If it drops below, that's going to signal more downside risk. And then now finally, let's look at the Russell 2000. As you can see here, it has the same pattern. It came down and broke middle Bollinger Band support. It broke through the 50-day simple moving average, through the 100-day simple moving average, and then it's bounced off of the 200-day simple moving average. That's the red line, and it got back up here to the same thing with the middle Bollinger Band and the 50-day simple moving average, but it's currently below both levels. Now for this chart, it's all about 151. That's the 100-day simple moving average, the gold line here. If that level breaks, that's going to signal downside risk, and then it could come back down there and retest that 200-day simple moving average at 145. So it really needs to hold 151. So if you see IWM below 151, that's going to signal that that the bears are winning and that it could drop much lower. And if you see it above 154, that's the top of this 50-day simple moving average. That's going to signal upside potential. It has to get above the middle Bollinger Band and the 50-day simple moving average to get a new uptrend going. And then if you look at the 15-minute chart, you can see here where it has a double top look to it, where it had the top here on the 16th and it came back over and formed another top, and yeah, and so and you can see this topped out right here with this level. It broke temporarily above it, and then it pulled back, and so now you have the big support level. This is that 151 to 152 support level. That's the low close from yesterday. If that breaks, then you could see a drop down here to the 200 and 300 simple moving averages between 150 and that 150 support zone. So that's the downside risk. If it drops below this 152 to 150, you're looking at a drop down to 150 to test these levels. If it drops below the 200 and the 300 simple moving averages on the 15-minute chart, that's when the chart's broken, and that's when it can really get moving to the downside. So keep that in mind for all these charts. If the candles start forming below those levels, it signals downside risk. If they come down and they test those levels and they hold, that is the reload level. That's where stocks tend to bounce off. But if they break through support, that's when the chart's really broken, and it's signaling to either get on the sidelines or get short. Okay, thank you very much for viewing this video. Please check us out at MyChartCoach.com. I'll post you can come check out our chat. I'll post the link below the video. Thank you.